Our next talk, we'll have a little fireside chat, and the name is DeSci Berlin. You're going to expect Web3, crypto, and you're going to expect science. But one of the sort of aspects that shouldn't be ignored, I should say, is the financialization and the commercialization, and it's the money talks. And so this panel is going to be the money talks.
I'm talking, but I'm not the money. So the money man is coming up right here. But I'm Aaron Weaver, so I'm the Chief Commercial Officer at Molecule. And this is Oliver Colville, who is a fund manager with a long short.
Hey guys.
Biotech hedge fund. Oliver and I actually worked together in an investment firm many years ago. And so he's got a lot of experience from actually being a bench scientist to working then in venture capital funds on the operational side. And then now sort of like trading NASDAQ biotech stocks or biotech stocks globally. But firstly, I might turn it over to Oliver just to actually introduce himself and just speak a little bit about the professional experience that you've had within the sector.
Yeah, so I've had a bit of a meandering career, I guess. That's what I started as an undergrad, and was all starry-eyed about pharmacology, and but also realized that I probably wasn't the best scientific operator, as in my actual ability to pipette and stick it out for hours on end was not the best. But I loved designing experiments, and I loved the outcome of the experiments. That was my two favorite bits.
So basically, you're impatient.
I'm totally impatient and maybe marginally incompetent on the bench side. But that kind of, I guess, was a bit of a segue into maybe I want to do something else. So I actually went into investment banking more on the biotech side. So I kind of got this big old strategic overview of the sector and all the different architectural players. So obviously you got everything from principal investigators who are running a lab all the way up to commercial stage companies that are actually getting the medicine to patients. So that gave me a pretty good overview. But then I realized that actually I hated banking. So I went back to academia and did I was at Imperial College London, was going to do a PhD, but then realized that again, I came back to the same problem of science, doing science, and didn't do a PhD, came to join Aaron at a Pioneer Investment Group, which is the family office of Christian Angermeyer. So we spent a lot of time doing work on longevity, a lot of work on psychedelics, and then from there have gone into the more public side, because at the end of maybe like 2020, 2021, the world got destroyed on the public biotech side. I'm sure a lot of you guys will have kind of recognized some of maybe if you dabble in some of these stocks, you'll have noticed the drawdown. And it was a great time to start trying to pick and choose companies that had maybe good fundamental principles, a decent amount of cash, that were trading at negative enterprise value, which is a great starting point for any investment thesis. So since then, I've been working on a fund with a guy based in New York, and we invest in small and mid-cap biotech stocks, and that's kind of what we do. And we spend our time, in the weeds on the fundamentals and getting to know management teams and all that kind of stuff.
So we've had a lot of musings over the years about what makes a good biotechnology company. Never seems that we've squarely come in on what is astounding. There's a lot of lessons to be learned along the way, but what is the one big thing that you wish you were sort of told once you sort of started out in this finance journey of this part of the industry?
I think that all science has a price. I think that's one of the, when you look at, if you are a scientist and you look at what you're doing, you think, how could this possibly not be worthwhile to someone somewhere? And that's obviously because you spend your time looking at something and there's maybe a bit of inherent bias in that. But what I learned throughout this entire journey is that, the translation of theory into practice is a long journey. That journey is fraught with lots of different ruts in the road and lots of different problems. Things go wrong the entire time in drug development. And you have to be incredibly price sensitive and disciplined on when you pick and choose to enter that contest. That's if I knew that from the beginning, I probably wouldn't be here.
But you're still persevering.
I'm still here.
Yeah. Maybe a little bit more of a personal question. I think once you told me that your uncle is actually in contention for a Nobel Prize. And so you've been around a lot of like good scientists in your life. Like, what are the observations that you've had of, maybe the habits, the mindsets, the mannerisms of these, top scientists? Like, what really distinguishes them from, other people's efforts?
I think my answer is not going to be actually that much of a surprise to anyone, because it's curiosity and tenacity and discipline. So my uncle is a biochemistry professor at Oxford and has dedicated his entire career to elucidating the mechanisms of how cohesin divides during mitosis, and developed various theories around it, and has spent decades in the field. And I remember we had a big family event a couple of years ago, and he had just discovered AlphaFold at that time. And he spent the entire family event on AlphaFold. We couldn't take him away from it. He was the speeches were happening, the drinks were happening, all this stuff was happening. Not interested one bit, because he had this incredible new tool that, as a biochemist, he'd been looking for his entire life. He'd been working on yeast-based systems. And suddenly you have this ability to interrogate protein structures in a way that he could never do in the early part of his career. And that was gold dust. So I think that obsession with what he does is probably what differentiates, good from really great scientists.
Interesting. You got to go deep. Talking about new tools and a way to draw insight and actually really interrogate ground truth around what's happening. We're having a conversation this morning about how these could be helpful in investing, and actually just being able to get a much stronger insight into biologically, effectively, what might be occurring with the drug. How do you see AI native tooling being really applicable to the investment field? What could you possibly do that could give you that greater degree of price sensitivity or understanding as to the inherent prospects of what someone is working on?
I think it's there's obviously a couple of different things. There's the first on the triaging side, right? The idea of having that ability to cross-compare publications, cross-compare trials at a second's notice is incredibly powerful. That's the kind of work that would normally take a couple of hours. I can do that in 1 minute now. So if you want to make split-second decisions in the market, maybe you're looking at something, some clinical data pre-market, you're not super familiar with the space, you haven't done your homework, but you want to get this understanding and go from there. That can be a very good use case. But for more, that's not really where you make most of your return as an investor. You make most of your return by thinking deeply and fundamentally and trying to work on things before they happen and being in the right place at the right time. So, I was thinking of the other day I was looking at a company that has a certain type of drug class that is very good at suppressing stomach acid. There is a competitor, there's a competitor category. It's very good at that as well. And the competitor category really impacts some type 2 inflammatory pathways that are really important in a host of different conditions like atopic dermatitis, EoE, it's called eosinophilic esophagitis. And literally no one had ever done the experiments to examine whether the company that I was looking at also had that kind of inflammatory modulation. No one had ever looked at it. And I got to the point where I was grilling GPT. I was find me the papers. I went and looked PubMed. I just couldn't find it. Couldn't do it. Got to the end of the internet. And so I was this is where I need a dry lab a bioinformatic stack to start interrogating RNA-seq, see if I can find anything in, is there anything on the binding data that I can find? Are there any protein-protein interactions that might give me a clue? And so that kind of stack, the ability to do as good as we can get to wet lab research without having a wet lab and without having to spend the cost on a wet lab, would be incredibly useful, I think.
I think you've seen some of the work that's been done around here in terms of autonomous, like closed loop, wet lab experimentation. Obviously, there's the cost that comes with that. Do you ever see that becoming part of the toolkit of a financier? Like, so it's just not necessarily a matter of drug development. It just might be a matter of proving reproducibility in, sort of a set experiment design.
I mean, for sure. One of the greatest challenges is trying to work out whether a company is telling you the truth. And there's a lot of, obviously, it's not necessarily manipulation of data, but it's obfuscation of key truth. And, maybe it's obfuscation of the binding potential, or is this really as good as this company says it is in terms of potency in cellular assays if I compare it head-to-head to, like, an incumbent? Is that really the case? And so that does happen, but it happens in a wet lab setting. And I know of funds that spend, tens of thousands of dollars to prove exactly those theses. But if you could democratize that, so the fund I work for is a much smaller fund, so we're not running billions, so we don't have the budget to do that. But if you could put that in the hands of a smaller investor, and if you can put it in the hands of a smaller investor, you can put it in the hands of anyone, potentially retail investors as well. I think that's a really interesting case study.
Zooming out a little bit, and there is a lot of emphasis on examining the science when you're sort of investing, but there's also other things. Sometimes there's a mantra, stock's not science, around things, because there's a lot of other matters or factors that effectively influence underlying sort of like stock or price performance in an underlying project. Like, how much is the data really informative of how things will effectively trade? Like, what sort of exists in the dark arts of biotech investing that sort of seem a little bit unobvious to the first time investor that might come into the industry?
Yeah, we've all had the horrifying situation of where a clinical trial data set looks great and the stock goes the other way, and you think, why? What happened here? What have I got wrong? And you then go and sit in a dark room for a bit. But I think one of the things that I've really learned over the last couple of years is sentiment and what are known as factors are a huge part of the driving force. So, biotech, as much as we like to think it's quite an isolated world unto itself, sits within a broader ecosystem. At the moment, it sits within an ecosystem that has the likes of SpaceX IPOing at the same time, and cash flows throughout the system in certain ways. So liquidity can flow in different directions. And if the sentiment is poor within biotech, what tends to happen is even if you have a good clinical trial readout, the stock will get sold. The converse is true. Maybe you can have a so-so clinical readout when sentiment is good, but it will go up. And that changes very quickly. And that's to do with largely macro. So, for example, since the US started bombing Iran, that situation has obviously triggered a different global outlook on how we view risk and risk stocks. So for the last couple of months, really good clinical data has not been rewarded, I think, or at least has been sold off after it has initially gone up. And, I contrast that to maybe the second half of last year and the first part of this year where, there were really early early phase 1-2 companies with non-controlled, non-placebo-controlled studies that were gaining billions in market cap off, data sets that I think in a different time would have punished the company. So there is the sentiment is a dark art. Now, the key question is, what is a good gauge of sentiment? And actually, weirdly, I found that X or online forums is a really good gauge of where sentiment is, because you can generally tell when people are in hysteria mode or when people are in elation mode, because when people start posting pictures of their returns, that's when you know that it's time to sell.
Are they also showing the L's?
Well, no one ever shows the L. It's like everyone is innocent in prison, right? No one does. So there's also I don't know if you're going to get onto this, but maybe there's a series of non-obvious, choreography to do with companies.
Yeah,
as well.
let's speak about that a little bit, because and probably a little bit around methodology also, and the choreographic elements that sort of sit around this, because I guess there's cues and things that you can look at that like sit outside looking at the data set, because this is an industry. There's a multitude of stakeholders. People are interacting with one another. There's, I guess, like signal in people being absent, or various people meeting and doing things within a public domain. Do you want to sort of like demystify that a little bit?
Yeah, I mean, so obviously, I think everything starts with the fundamentals. That's the first and foremost. That's your bread and butter work that you have to do. So that's, it's looking at the management team, so the experience of the management team, what they've done beforehand, and are they really good operators? Have they really delivered things in the past? Have there maybe been some skeletons in the closet? That also involves generally speaking to the management team to kind of get a sense of the whites of their eyes. What are they like? Are they promotional? Are they not promotional? Some are very promotional and back up their words, and some are very promotional and don't back up their words. So it starts with really understanding the team, but then also you have to understand whether what they're developing is a good tool. Like, are you if you're looking at a drug molecule, is it a good hammer? As in, if you use this hammer to hit a biological target, is the hammer going to break in half? Is it right for the job? That's I think a key principle, and that's something that when you think about also exits, because exits are a really important part of this industry, and pharma wants to buy good tools, you have to look for drugs that have good drug-like properties. And so that also filters in what is the target product profile. So if this was developed in 5 years' time and 10 years' time, does it fill an unmet medical need? And how does it compare to what is currently there? So it's a lot of landscape mapping. It's a lot of competitor mapping. You have to also understand whether the disease biology that this particular target is involved in is actually correct. And then you have to line that up with clinical trials. So can you run a clinical trial that I guess gives you a readout that is, one, clinically meaningful, and two, approvable. So, I take the example of, we've tried thousands of different compounds in Alzheimer's disease. There have been a couple that have worked, and it's been on the amyloid thesis. But the endpoint in Alzheimer's disease trials is really hard to hit, because I think it's maybe not correlated with a lot of the disease pathways and biology that we've tried to hit it with. So you always start from a fundamental basis. Then you have to go into, how much does this actually cost? So do I get this science for a reasonable price compared to a competitor that's in the same space? So is it 100 million or is it 5 billion? What am I paying for it? Obviously, you will get situations where this probability of success is largely priced in, because everyone's done the same calculations. But you do get situations where the probability of success is completely incorrect, and you have outsized moves. Like, I don't know, some of you guys have seen Abivax, which was a company that kind of went from 500 million to close to 7-8 billion off one phase 3 readout that everyone had totally written off. And so those things do happen. And so it's about trying to position yourself such that you minimize your downside risk. Like, what's the floor? Is it cash? And maximize the upside. That all then feeds into the dark arts part, which is then the choreography. Like, do these guys turn up to conferences? What do these guys say on conference calls? All of this is public information. Do they drop out of conferences?
Sorry, just why is that significant? Maybe could you share with us?
Yeah, so generally when you can tell when there's a bit of smoke, like when maybe a company might be not telling you something or not revealing something, and it might be talking to big pharma companies, or it might be trying to sell itself. And you can tell that maybe from the way that the CEO answers certain questions. You can tell that maybe from the way the CEO talks about it. If the CEO starts saying, I'm looking to take this, I want to build an empire, I'm going to acquire another asset, sure, but Sometimes they also say, maybe it's, I'm really, clear-eyed about the value of a big pharma partner. So you can kind of get a sense of what the company is looking to do, first and foremost. But then, if they, sometimes there's periodic conferences throughout the year. So like in January, there's JP Morgan in San Francisco. But throughout the year, there's lots of different conferences that bankers put on. And what usually happens is companies will drop out of those conferences. And they drop out without any notice, and they don't give a reason. And they do it usually at short notice. A lot of that, the signal-to-noise ratio can be quite low on that. But if you take it in conjunction with other signals, like have these guys not done a financing recently? So if they haven't financed, why? What are they waiting for? They need money, so why didn't they go to the capital markets to raise it? What are they waiting for? Or they've delayed the filing of their quarterly reports or their annual report. Why are you delaying? If you usually file it on the 1st of the month, why are we now at the 15th of the month and you haven't filed it? So there are some non-obvious signals that you can pay attention to maybe get a sense of what companies are trying to achieve.
And how do you think through the regulatory piece too? There is there's probably not a lot of clarity in the way that the FDA behaves at the moment, but there is some signal in the way that they might engage with patient advocacy groups, certain statements, the way that adcoms are effectively convened, and the way that they examine things. So that as an agency matters a lot. It's ultimately
huge.
The market entry gateway.
Absolutely. The FDA is the Food and Drug Administration. The US is the it's the judge, the jury, and the execution.
For 20% of the US economy.
For exactly. So you have to basically, if they say jump, you say how high. You have to do everything they say. There's not a lot. You can be creative with. You can be creative with trial designs, proposing it to them, but they will never give you proper, as it were, yes, you can do this kind of feedback. It's always, that's an interesting design. It might serve as the basis for regulatory approval. The company then has to go and interpret that. And then that's then a question of, do you think the management team has enough experience to interpret that kind of Sphinx-like feedback that they get from the regulatory agencies? And that can be that is misjudged quite often. So you also have to, the regulatory piece is really, really important. And a way to understand, a way to do that is also benchmark, basically against what competitors have done. So, like if a company comes out with a completely different clinical trial design to their nearest rival, why? What is it that they are doing differently? So you then have to grill the management team, or you have to take a view that actually these guys are trying something that's maybe a bit too aggressive and might not work, and that introduces risk into the equation.
You mentioned X being good for effectively examining sentiment before, but we all open up our phones a little bit later and we actually start scrolling through it. So what are you looking for in sentiment? And also, how can you tell whether there's a particular trending topic online that might be over-exuberant and doesn't really have the core substance behind it? So, it's just, there's a little bit of a pump going on. But how can you methodically, effectively examine the way that people are exploring these topics online?
Yeah, what's a real signal of actual value creation versus what's a couple of, maybe a spike and then a drop, it looks like a mountain. Generally, anything with a rocket emoji next to it, no. It's like a red flag.
Or diamonds.
Diamonds, rocket emoji, to the moon, whatever. You can see when a stock is being pumped largely by the accounts that are doing it, because the pump will be largely maybe based on chart. So chartists do it. So it's like, we've got a Head and Shoulders spike appearing, and there's a resistance line at 418, and let's do it there. That kind of stuff is short term. It'll be largely algo driven, it'll be volume for the first couple of days, and then once the volume dries up, the algos will leave and the stock price will collapse. So that, but also, you also have to look at this. This again brings it back to what is it that, why is this being pumped? So for example, some small companies that are, I'm not talking about 2 to a billion. I'm talking about companies that are maybe 30 million or 20 million market cap that are kind of forgotten about. They will sometimes they put out press releases just to get attention. And the press release will say something like, "We had a meeting with the FDA." Cool.
Nice for you.
Yeah, that's great. I'd scratch my back today. That's what does that mean? It doesn't mean anything. It means the meeting could have gone terribly. But that announcement can trigger algos to buy into the price. That moves the stock. It gets attention pre-market. Up it goes. People look at it, try and impute some kind of fundamentals to it when there actually aren't any. That is not sustainable. And that will probably come down as the volume dries up. But what is more sustainable is, again, looking at what is it that this company has done that has significantly increased its chance of becoming a real medicine, is ultimately what, at the end of the day, it's about.
Looks like I've only got a few minutes. This talk went relatively quickly. Thank you, Oliver.